What's up, everyone? Jordan Dove here. Hey, look, I know you've been hounding me to make more videos. I appreciate the comments, the support, the feedback. It's all great stuff. I'm going to make it a mission to start putting out more content, talking about the things that matter, giving you my version of the truth, talking about the things that the mainstream won't talk about, the things that actually affect the working middle class. Okay, so Greg's been hounding me. Greg Mannarino, go follow him. I know a lot of you do. Hounding me to make more videos. He's also been hounding my good partner, my good friend, my mentor, Chuck Barone, to do some videos because the things I get to hear in the background are just it's gold. It's gold. Okay, it's true gold. In the past 6 months, everything he has been telling me, what's going to happen, watch for this marker, that marker. Hey, maybe make this move, not that move, whatever. He's been spot on every single time for the past 6 months, and I wish he would have been making these videos the past 6 months because you guys would understand why I call him the guru. Okay, but I'm going to actually play his first video after this little segment right here, so I hope you guys enjoy it. I'm going to go leave a link below for Chuck's YouTube channel. Go subscribe to his channel. Go help him get his first 100 followers so he can change his channel link. We would really appreciate it. That would be absolutely wonderful. On another topic, every Monday I send out a newsletter to my following of 7 or 8,000 subscribers I have on my private network, and it's my Monday market pulse, which I talk about real estate, the economy, the Fed, etc. And I'm going to start sharing that now on Substack for you guys. So go ahead and click the link in the comments in the description. Register for Substack so you start receiving those emails, and make sure you subscribe to Chuck's channel and check it out. I'll also be doing a video series every Monday called The Market Pulse, and I'm going to start pulling more national numbers and including those into that newsletter for you guys because I know all of you do not live in Southern Nevada. So without further ado, I present to you Chuck Barone.
Buddy, welcome to our first ever finance blog. I'm glad you're here, and I hope you're going to find this informative and something that will be beneficial to your life. Before I get into our message for the day, I want to thank some of my friends, Jordan Dove, Greg Mannarino, and a few other guys who've been doing these blogs and have been kind of pushing me to get one and get this message out. Some things are happening in the market right now that you need to hear the right voices and get the right advice to navigate, because these are going to be some very, very difficult times. Anyway, so today's message starts with a pretty simple one. As most of you are probably already aware, the Federal Reserve went ahead today and raised their interest rates 0.75%, bringing their rate to the between, I like how it's so precise, between 1.5 and 1.75%, which basically I interpret as 1.75. So we sit here at 1.75 with an inflation rate this month at 8.6%, and we have our political friends in Washington telling us that we're pretty much at peak inflation now, and these few little interest rate bumps they're making are going to solve this problem for us. I hate to be the bearer of bad news, but I really don't see it going down that way. If you look historically, the last time we had real inflation like we're suffering with right now, it took them years to get rid of it. And to do it, they had to raise rates to 20%. 20. You could get 12 to 14% on your savings account or your money market accounts. Now, I'm sorry to say that I'm old enough to kind of remember those days. I was alive and well, even though I was young. And I remember what it was like, and this time it just seems to be a little bit different. You know, last time around it made things expensive and people were screaming because the price of gas hit $1, okay? Remember, people were like, it's going to cost me $15 to fill my tank, how am I supposed to pay that? Well, now we've already seen a nationwide 5%. Here in Nevada, I paid $5.69 the other day when I put gas in my car. And the only way they're going to really get this inflation under control is when they have the interest rate and the inflation rate kind of at where the inflation rate's a little bit, or the interest rate's a little bit higher. So that's what's going to finally dampen the economic demand in essence, cause a giant recession, which we're all going to get the fun of living through. And that then will tone down inflation. And the good news is it'll set the stage then probably for many years of us being able to have rate cuts, which spurs the economy rather than these giant rate increases, which is going to dampen things. The stock market, I hate to say it, it doesn't look like a great place to be putting fresh money right now. I certainly wouldn't advise anybody to hurry up and sell your portfolio out. But if you have a position that you have a giant profit in, maybe it's a good idea to take some of those profits. Keep some powder dry, because when there's these big crises and these big tumult in the markets, usually when it ends, there's a little bit of opportunity there. So it's always nice to have something available for those opportunities. And also every portfolio has that one clunker in it, that one turd that you're holding in the hope that someday it's going to turn around. Might not be a bad idea now to finally dump that thing, take your loss, and use that to offset gains with your tax return and get a little bit of benefit and have that cash. Preserve what's there in your portfolio now is going to be the mantra over the next few years. You know, we've been in this market and we've been in this basic cycle for the past 40 years where it's been rates coming down from the highs of the early 80s, spurring economic growth, and then you have a whole bunch of other economic factors, obviously, but we've basically been in an era of easy money, money being cheap, credit being extended very easily, a lot of buy now, pay later kind of deals. But now we're going to move into a little bit different type of environment, well, a lot different, because now we're going to move into the era of expensive money. And it's going to change the whole psychology of the way our economy works. Back before they had the big inflation in the 70s, the United States of America saved a lot of money. People in this country saved money. People were debt averse. You know, people were not like, matter of fact, there really weren't credit cards until into the 80s. People had their Diners Club or their Amex, which were not really credit cards, charge cards. You pay at the end of the month. Well, with the era of easy credit and declining rates over the past decades, credit cards have become pretty commonplace, and so is the use of them. In my job as a mortgage loan officer, a mortgage broker, I deal with people's credit every day. I see what the situation is in this country, the levels of debt people are carrying, and this is all going to change because that debt's going to get a lot more expensive. It already was expensive in my mind, but it's going to get a lot more expensive, and it's going to be painful to carry. And you're going to see rates going up on cars and, of course, on houses. They already have affected the market. And we'll get to real estate in a little bit because that happens to be the area that I specialize in. But if you're a stock player, you know, try to get your portfolio set up in a little bit more of a defensive posture. Now's probably not the best time to be thinking about trying to find giant returns. I would tell you, get yourself in a position where the mindset is preservation of capital. You know, back a long time ago when I was a stockbroker and I was training in finance, the first lesson they teach you, well, one of the first, is investing is all about getting a return, but more important than your return is preserving the capital you put in. Now, you want to earn money on your money, that's why you invest, but the object is to not lose money, right? Now, if you're losing gains and you have a position where it's going up and down, that's one thing. But if you're losing money that you're bringing into the investment, well, that's totally something else. So now we want to try to preserve what we have, make sure that we have our portfolio in the best position to thrive in this environment and not get beat up like so many portfolios have been and are continuing to be. Although the market did have a little bit of a rally today. I think that the market's already priced in this rate increase today. It was kind of a shock to me. I came into my office on yesterday and I looked at the rate sheet, my morning rate sheet, and I saw that mortgage rates on a 30-year fixed for a government rate, FHA, VA, were sitting at 5.25%. It was such a shock to me when it hit that. Now yesterday I come in and they're at 6.25%. We're talking about in a 1 week period, they went up an entire percentage point. Now, with the way houses are priced here where I live in Las Vegas, the median price of about $450,000, I'm here to tell you that that rate is pretty much the end of the real estate market here in Las Vegas as far as people financing to buy houses. You can't buy a $450,000 house at 6.25. You're looking at a payment of over $3,000 a month. Now, any mortgage guy who takes his fiduciary responsibility seriously and feels like he wants to do the best thing for his client, not just his W-2 at the end of the year, how can you in good conscience recommend a payment like that to a customer? In Vegas, where I live, the median household income is just under $60,000 a year. So people are making about $5,000 a month for their household income, not individual, household. So if they're making $5,000 a year, how are they going to support a $3,000 payment or even a $2,000 payment? Because that $5,000 is a gross number, so now you're going to take taxes, your 401k contribution, your insurance, and everything else. If you can net out $4,000, you're pretty fortunate. And now you're going to half your income's going to a rent, and if you're buying for $3,000, 75% of your income's going for just your housing. You don't exactly have to be Warren Buffett to understand that that's not sustainable. It's not. It doesn't going to work. So what I see happening in Vegas real estate is going to be the same thing that's probably going to happen all around the country. Prices are going to have to adjust. I was just futzing around this morning with my mortgage calculator, and I'm figuring that to get payments in a reasonable range for people, and in my world still not reasonable, but around between $2,000 and $2,400 a month, the median price here in Las Vegas is going to have to come down $100,000. So we're going to see median prices dropping from $450,000 where they are now to $350,000 where they have to be to allow people, especially first-time buyers, into this market to come in and finance a house. And even then, it's going to be very uncomfortable because you're still looking at a payment of $2,200, $2,300, and with what I was just talking about, the monthly income, it's still a very high ratio from your housing expense to what you bring in. So it's just going to be really, really interesting times right now. We're gonna live through an end of an era. You know, and I was fortunate enough, I'm old now, to live through this end of hard money into this easy money era we've enjoyed for the past 40 years. And now I guess I'm living long enough to see it change back. So I tell you, prepare yourself for this, because there's nobody going to come help you. If you look at the macro world situation we're in right now, okay, we got rampant inflation that's making it impossible for people to pay rent, to put gas and fill their car up. The numbers are shocking. Go to the grocery store, try to buy meat, man. Wow, it's outrageous. If you can find what you want, which some people can't, can you even afford it anymore? Everybody's adjusting their whole lives into all of this, right? So where are we going now? People can't afford the basics in life, right? Now, if what I'm thinking is going to happen, here's the coup de grace. You're going to have people can't afford to live, and a little bit of equity, the money they built up in their house over all these years, now that's fixing to get wiped out in this coming real estate correction. So I tell you, be cautious with your money. Treat it really, really cautiously. Treat it like your best friend or your most important thing, because it's gonna be, man. And try to be prudent in your purchases and what you do with your life. Try to be a little bit less impulsive. Move the ball forward where when this storm we're going to go through ends, and now it's clear skies and rainbows again, you're going to be in a position where you can really take advantage of the opportunities that are going to present themselves. Get defensive. You'll be glad that you did. Anyway, I can babble on and on forever, guys. I'm going to cut this off for today. We're going to be We're going to be doing one of these every day at the close of the market to talk about that day's events and the other stuff moving forward. Hopefully I'll hear from some of you to let you know what you liked, what you hated, what you want to hear more about, what you want to hear less about. And I know I tend to ramble and kind of veer all over the place. I just don't want this to be like some scripted news show where it just seems all so canned. You're going to get the absolute truth here, whether you like it or not, at least the truth as I see it. And you're going to get it in language that you can understand. It's not going to be some sophisticated Wall Street guy talking with their jargon and all their acronyms and crap where you're like, well, what's he talking about? We're going to break it down to the most basic, where anybody can understand what's happening and understand how to either protect themselves from what's happening or profit from it. Anyway, I hope everybody has a great day today. Tomorrow's going to be an interesting day in the market. We'll see how it works. Awesome day. Take care.